I guess we should start on Tax-R, which looks at the companies that benefit from the tax reform. Wouldn't most of the bidding have come in the days leading up to the passage of the tax reform? Now that it's over, how do you look forward and push this ETF ahead?
It's a good question. I think really the first order effects have kind of occurred and are occurring still. I think that's what people were investing in, and you saw a big rally after Trump was elected in a lot of those tax reform names. But then you actually saw some of them fade on worries that it wasn't going to go through, and then I think that it went through, we saw a little bit more of a rally. And so we've seen that fund performing pretty well. I think really the important thing is the next order effects as we start seeing earnings roll through when Wall Street starts really embracing these companies have had a one-time step up in earnings momentum and earnings power. And then that's going to roll through into future quarters, into full year earnings. And you can put a multiple on that and really see these stocks, I think, get another leg up.
Wait, maybe this is a really ignorant or naive question, but like what happens to this fund like in 3 years from now when nobody is talking about tax reform or anything like that?
Well, so I don't think people are going to stop talking about tax reform personally. I think the personal deductions and effects are going to roll away in the mid-2020s, and it's going to be a renewed focus. And people are going to start talking about the corporate tax side again as well. So I think it's going to continue to play on. We're going to look for those next order effects, though, like I said. Right now, we're kind of rotating into some consumer discretionary stocks and looking at them as a second order play. We're looking at some of the banks, some M&A opportunities as well. So I think it's going to be an ongoing theme for a multi-year period. You look at Obamacare, too, right? That had implications on healthcare stocks for almost a decade now, right?
Yeah, well, this is an actively managed ETF, as we mentioned. So how often are you going in there, rebalancing and changing up some of the names?
So we reserve the right to rebalance intra-quarter, but we're trying to stick to the ETF industry norm of quarterly rebalancing. So that's March, June, and so on. So that's really how we're thinking about it right now. We do make some changes intra-quarter. We made a small change this week, actually. We made some small changes in November, too, in Tax-R, just as the debate was evolving.
So there's a number of themes here. If we go beyond tax reform for this government, infrastructure spending, energy independence, which is something the president talks about. You've wrapped up some of those themes in a Republican-led ETF.
That's right.
And actually, we've got the opposite as well with the Democrats. So just explain to us what's going on there, because there's some kind of obvious themes, I think, that we can pull out from both.
Yeah. So the GOP fund is invested in defense and border protection, deregulation, which is financial and energy deregulation, infrastructure, and tax reform are really the key themes in there. I think the idea being we look at the most important policy initiatives for each party over the coming years and then try to select a very concentrated portfolio that is specifically aligned with those policy themes. So 5 themes in each the GOP and Dems portfolio. Dems is in healthcare expansion, environmentally conscious, and social good are the 3 biggest components of that.
Yes.
But you'll see they kind of ebb and flow with over the long term with policy trends. And so if there's a concern that Republican policies are going to, not be going through, you could actually see the Dems fund rally, and that's something that we would expect. And it can happen even if Republicans control both chambers.